What exactly on balance does this mean for the oil market? Does it mean that we will see these production cuts stay, maybe get extended?
Yeah, I mean, I think we're likely looking at a full-year agreement. I mean, it does not surprise me at all the Russians were out there saying too soon to commit to a full-year deal. The Russian corporates hate shutting in production. I mean, they benefit from volume. The state takes the upside of higher prices. So for them, they don't like the agreement. So they always have to negotiate. But for Saudi Arabia and for the rest of the OPEC producers, current prices still remain below their fiscal break-even. So they would like to see prices a bit higher from here. And they want to make sure that President Trump carries through with certain commitments on sanctions. I mean, last year, the Saudis were really caught off guard when he issued exemptions when they thought there'd be zero exemptions. So they're going to wait to see what President Trump does with the May decision on Iran.
One could argue that whatever ROPEC, OPEC plus, whatever you want to call them, the partnership, whatever they're doing is working because prices are markedly higher, both for crude oil and for gasoline prices. So what is the argument against doing that particular thing, besides the fact that Russia really just wants to get those spigots going again?
I mean, really, from Saudi's perspective, I mean, when prices were, Brent prices were in the 80s, they were getting a lot of pushback from consumers like India, from China, but also from President Trump. I mean, I think the biggest factor last year, which caused them to change course, was pressure from the White House. And the White House basically said, look, we helped you out, Saudi Arabia. We pulled out of the Iran nuclear deal. You're going to help us out with additional barrels on the market. But they thought that basically Iran would be taken almost to zero, and we're very caught off guard by what happened. So now what they're saying is, President Trump, we know you're going to basically issue a decision on Iran in May. We're watching what you're doing on Venezuela sanctions, but don't expect us to preemptively flood the market.
You brought up President Trump. There is this notion right now that the U.S. wants to kind of get rid of the cartel aspect of OPEC and friends. How does OPEC feel about that, and how can they react to the rhetoric coming from the White House and U.S. lawmakers?
I mean, they're really watching the NOPEC bill in Congress, which is essentially declare OPEC a cartel and subject to antitrust legislation. What they're basically saying, and what the OPEC officials were saying in CERAWeek last week in Houston was, okay, fine, you want to get rid of OPEC, you want to basically break us up, well, fine, we'll max out production, we'll take prices back down to 30, and U.S. shale producers will pay the price for that. So you have to make a decision, Washington. Do you want to have us providing stability for prices, or do you want us basically to max out production and take out one of your growth stories in terms of the economy, U.S. producers?
All right, so all of this now plays into this contextual move by these partners in OPEC to have a meeting sometime in April or not, based upon how production is moving. So will they have a meeting, and is there enough data by OPEC and Russia to maybe continue those production cuts going into the second half of the year?
I think they're absolutely right. I mean, we're not going to know on the Iran decision until May. Why have a meeting in April? Why put this added pressure on the organization going into a meeting? Why not punt the decision to June? I think that's going to be the likely course of action. And at that June meeting, again, I think we're likely looking at a full-year extension based on where we are now.
Where do you think Brent prices are and WTI prices are headed over the course of the next 6 to 9 months?
I mean, we've been pretty constructive on Brent prices, and our forecast for this year was it would average $68. WTI would average 60. There are wild cards to watch that could take us higher. We've talked about it before, Dominic. If the U.S. pulls the trigger on secondary sanctions in a serious way, essentially says to India and China, you have to cut your Venezuelan imports or we're going to lock you out of capital markets like we do on Iran, that will basically really, really crush Venezuelan exports. So there are real significant U.S. policy actions which could push these prices higher.